Hey guys, it's Steven here. In this video, I will rank all the Fidelity Index Funds on a tier list that includes domestic equity index funds ranging from small cap to large cap, international index funds, fixed income funds, and specialty index funds. Over the past month, I have researched and analyzed each index fund for the historical performance, portfolio holdings, risk profile, expense ratio, and most importantly, potential for future returns. This tier list is my personal opinion. Feel free to leave comments down below where you think a certain Fidelity Index Fund belongs on the tier list. Hopefully this tier list can serve as a guide of where you want to start investing for Fidelity Index Funds. Before we get started, one important distinction for this Fidelity Index Fund tier list to keep in mind is that this tier list is for long-term investors. Investors with at least a 10-year time horizon or looking to buy and hold for life for long-term wealth. What is the index fund tier list? As we go through the index funds today, the S tier funds are the best of the best. These are the greater standalone funds that will produce excellent results for long-term investors. If you are starting an index fund portfolio, these are the funds that you would choose first. A tier funds are very similar to S tier funds, but they may be lacking one component or another when compared with S tier funds. It could be higher volatility with the funds you select, or you might be less diversified depending on what you choose. However, if you are making an index fund portfolio or choosing multiple funds, then A tier funds are definitely worth considering. B tier funds are not going to produce as great of a long-term performance as S or A tier funds, but they can be utilized in specific circumstances. Whether you're looking for something in particular, if it's less volatility, or just want to have safer returns, potentially then you can consider some of the B tier funds. C tier funds produce notably significantly less returns than any of the other funds in a higher tier. Funds here are for people who are willing to potentially take a little bit of a chance on things such as expecting greater future performance, funds that have had weaker performance at least when compared to the funds above, or reduced volatility as you get closer to your target retirement age. D tier funds are funds that are not worth considering if you're picking your first few funds for your index fund portfolio. There are much better choices than these, as this tier severely underperforms when it comes to producing long-term results. Funds in the C tier possess some of the qualities of D tier funds while producing better returns. Let's jump right into it. Let's start off with a few specialty Fidelity Index funds that may not be as popular or well known. The Fidelity Real Estate Index Fund, FSRNX, with an expense ratio of 0.07%, allows us to add real estate exposure to our portfolio without the headaches that come with managing physical real estate or being a landlord. While the returns from real estate investment trusts do not appear to be as great as the equity index funds that we will come across later, they provide that real estate exposure that makes your portfolio more resilient through all economic cycles. I put the Fidelity Real Estate Index Fund, FSRNX, in the A tier. Next, we have the Fidelity Nasdaq Composite Index Fund, FNCMX, with an expense ratio of 0.29%. It is a large cap growth index that contains all the big tech companies such as Apple, Microsoft, Amazon, Facebook, and others. But we have better Fidelity Index funds with similar holdings and a much lower expense ratio. This goes into the C tier. The Fidelity 4-in-1 Index Fund, FFNOX, with an expense ratio of 0.12%, is an interesting index fund that includes domestic equity, international equity, investment grade bonds, and cash. For long-term investors that do not like as much volatility, this could be considered, as this fund will provide moderate returns. I put this in the B tier. Next, let's look at some of the more popular large cap index funds. We'll start with a few Fidelity Zero Index funds. The Fidelity Zero Total Market Index Fund, FZROX, with no expense ratio, seeks to provide investment results that correspond to the total return of a broad range of US stocks. Total market index funds are a staple in any index fund portfolio, and with an expense ratio of 0, enough said, this is our first index fund that goes into the S tier. The Fidelity Zero Large Cap Index Fund, FNILX, is also one of the best zero expense ratio funds. a large cap blend index fund with strong companies in a portfolio that has 30% of holdings identified as information technology and other large companies across a broad range of industries. This also goes into the S tier. Other large cap index funds include the Fidelity Large Cap Growth Index Fund, FSPGX, and the Fidelity Large Cap Value Index Fund, FACOX. Out of these two funds, which one you prefer depends on if you're more of an investor in growth stocks or value stocks. Growth stocks are companies which are considered to have a good chance for considerable expansion in the future, either because they have a product or line of products that are expected to sell well, or because they appear to run better than many of their competitors, and thus they are predicted to gain an edge over them in the future. Or if as an investor you prefer value stocks, which are usually larger, more well-established companies that are trading below the market price the analysts feel the stock is worth, depending upon the financial ratio or benchmark that is being compared to. Value stocks also tend to outperform during bear markets and economic recessions, while growth stocks tend to excel during bull markets or periods of economic expansion. Regardless, both are fantastic choices. I have both of them in the S tier. We also have the Fidelity 500 Index Fund, FXAIX, which is a fantastic choice for a standalone fund that tracks the S&P 500 index, and the Fidelity Total Market Index Fund, FSKAX, which seeks to provide investment results that correspond to the total return of a broad range of US stocks, both with an expense ratio of 0.015% and belong in the S tier. The last large cap domestic equity fund is the Fidelity US Sustainability Index Fund, FITLX. This fund is a little unique in that it seeks to provide investment results that correspond to the total return of the MSCI USA ESG Index, which represents the performance of stocks of large to mid-cap US companies with high environmental, social, and governance performance relative to their sector peers, as rated by the MSCI ESG Research. FITLX has an expense ratio of 0.11%, and I placed it in the A tier. Next up, we have the mid-cap and small-cap index fund. Fidelity has a wide variety of these particular funds. Overall, mid-cap funds have higher volatility than large-cap funds, and small-cap funds have the greatest volatility when compared to either mid or large-cap funds. Typically, small-cap funds have a market cap between $300 million to $2 billion, and mid-cap funds have a market cap between $2 billion to $10 billion. Both small-cap and mid-cap index funds have the potential for greater future returns than large-cap funds, but the trade-off is in the higher volatility. An investor can also choose between the growth versus value small and mid-cap funds. The standouts among these, to me, because I like both growth and value stocks, is the Fidelity Mid-Cap Index Fund, FSMDX, which is a mid-cap blend, and the Fidelity Small-Cap Index Fund, FSSNX, a small-cap blend, both with an expense ratio of 0.025%. I have these in the S tier. I placed the other mid and small cap funds into the A tier, but if you can stomach the volatility, these funds are easily also S tier funds. However, if you were to select only one index fund, I would have these ranked below large cap S tier funds. If you're selecting multiple funds for your index fund portfolio, these mid cap and small cap index funds are S tier funds and also make up a good portion of my personal portfolio. Next, we get to international index funds. Fidelity has quite a selection of these. While I have tremendous faith in the growth of US companies, many countries around the world have fantastic companies. However, for the next 25 to 30 years, I do not see international equities outperforming US companies. The US is still the leader in innovation for the foreseeable future. International equities also produce less returns than domestic equities historically. So that's why I have most of the international equity index funds in tier B and C. The Fidelity Emerging Markets Index Fund I place into the C tier. When I look into this index fund, it has a portfolio allocation of greater than 70% of emerging markets in Asia, and historically has produced underwhelming results, which I won't dive into here, but can be due to a variety of factors ranging from political instability to still developing a skilled workforce. If you think international companies will surpass American companies in technology and innovation, you can have them in a higher tier, but I don't think that will be the case for a while. Last but not least, we have the fixed income index funds. Fixed income have produced significantly less returns than equity index funds historically and are better for investors with a shorter time horizon. If you want to reduce the volatility of your overall portfolio, you can consider adding a bond index fund. But as a standalone index fund, they will be severely lagging in returns compared to equity funds. I have most of the fixed income index funds in Tier D, with the lone exception of the Fidelity US Bond Index Fund, FXNAX, in Tier C, as I believe it will provide slightly higher returns than the other fixed income funds. Let's take a final look at the Fidelity Index Fund tier list. How do you think I did with the tier list? Hope you guys found this video helpful. This tier list is a great starting point for long-term investors interested in Fidelity Index Funds. There is such a wide selection of great index funds. If you disagree with any of the rankings or feel a particular index fund should be ranked higher or lower, feel free to leave any comments down below. This tier list is my personal opinion after analyzing each index fund for historical performance, portfolio holdings, risk profile, and most importantly, potential for future returns, which can be subjective. If you enjoyed this content, be sure to like the video, subscribe, and hit the notification bell for more videos delivered to you. Have a good one.